in many ways kind of two sides of the same coin. The 50-point cut that we saw from the Fed this morning was largely in reaction to the subprime and mortgage lending debacle, which has led to alarm bells being set off, a warning of a recession in the U.S. economy. Trying to save the U.S. economy, that's exactly what Dr. Bernanke is trying to do. Well, the markets took the lead of the Fed with great cheer today. You saw the short end of the yield curve, gold, and, of course, stocks all up. And yet this morning we have a warning from the likes of China Construction Bank, CCB, the number 2 banking group in China, now warning of the overheated property market in China. According to press reports this morning, the bank says that adjusted estimates of risk expectations and increases in impairment provisions for non-performing loans have now reached north of 90%. Let's talk a little bit about the very different set of dynamics and the dichotomy here. Gong Liang is credit analyst, CFC Seymour, and an expert in the China property markets. Morning, sir.
Morning.
First of all, let me take let's start top down and talk about what the Fed has done with their 50 bip cut there. The expectation was for a slightly more lukewarm move than the 50 basis point cut. What is your expectation about how this will reverberate throughout property markets in the world? Positive for the U.S., maybe no effect at all on this part of the world?
I think overall it will positive for the U.S. markets because it's more easy to lend money from the central banks, and the more liquidity will be inputted into the home market. Mm-hmm. But I don't think it will increase the liquidity for the home market to save that market back to the original prime time, because still the default rate will be there, and the crisis from the subprime, not only in the United States but also in other parts of the world, for example in China, I think is still risky.
Mm-hmm. Let me make the link between monetary policy and the attraction of greenback denominated assets. The fact is China is still one of the biggest investors in U.S. treasuries. Are there going to be any implications on the Chinese banking system? You know, this secular weakness that we're seeing in the U.S. dollar. Has that entered into your analysis at all when you're looking at, distinct metropolitan property markets in China?
The property market in China, I think they have gone through more than 10 years increase, and now I think it is all the developers, they are making a bet on the properties. So they are waiting for a good time to sell their projects. They're withholding the pre-sale or even the development of all the property. I think it is very risky because for some smaller developers, their capital chain may not be enough to support their future growth if the market is down. I think it is possible the market goes back to 10 years ago where when the situation was quite similar to these days.
Right. The FT is reporting this morning, the chairman of CCB, the China Construction Bank, you heard me earlier, putting some numbers on the kind of risk premium in the Chinese property market and how it's rising. And he says that essentially, it's overheated. I've got some figures here. In the last 7 months, property prices in Shanghai up 100%. Hangzhou in 5 months up 150%. In 2 months, right across the border in Guangzhou, 42%. In Chengdu, in the space of 1 year, we've seen capital value increases of 300%. To me, having gone through Economics 101 20 years ago, that points to overheating any way you define it. Yes or no?
I think it is really overheating, but it all depends. I think to some locations in Tier 1 cities, because developers, they cannot get enough land bank, so they have to move to the Tier 2 cities. I think a proverb that early birds catches worm really is the golden rule for the real estate developers. Otherwise, without enough land reserve, some developers may fade away in the next 5 years. So they have to make a bet on land bidding, and you can see the prices double. And I think the government, some local government, is really happy to see that. And then banking sectors, they are now relying on that sectors. So it's kind of this triangle relationship between developers, banks, and the local government.
Very incestuous.
Yes.
In a lot of ways. We've got big IPOs in the market. Ao Yuan is in the market for $3.5 billion. Hong Kong got Soho China, which has been trying for some time to hit the market. Is there going to be enough demand for all these? I guess anytime anybody offers anything in China, because they're just dying for more alternative investments, people just make a beeline and go straight for these, regardless of the valuations, don't they?
Yes, the valuation, I think, is really not cheap in China because people are looking at a good, bright future in China, not only in property but also in other sectors. But I think why they want a lot of money, because they have to make a bet for the land reserve. Otherwise, they are afraid that they cannot survive more time. So it is the real the last time they can have the money from the market.
Let's talk a little bit about how you're playing the market. You do have some you do have some preferred holdings there. We're looking at Agile Property here, which makes it onto your preferred list: Shanghai Real Estate, Hobson, and Greentown. Do you want to just give me a really short blurb on your rationale when you boil it all down to why you like these companies, which have really seen quite a run up in their asset prices?
For Agile, I think this company is a little bit conservative, which is very welcomed by the bond holders, because they have like a 24 million square meters land reserve on hand, and their cash is sufficient for the future development. Hobson, that company is only focused on the tier 1 cities, because the management said there's no need for me to go to tier 2 cities now.
Right.
We have enough land reserve, but I don't think their strategy is so clear, because without the tier 2 cities, how come you can get so high margin? And for Shanghai Real Estate, that's kind of a small developers. They have very landmark properties in downtown Shanghai, but still they have to make a bet for more land reserves. And for the other smaller property developers, I'm afraid if they are too aggressive, the capital chain will be break.
Okay.
Yeah.
Appreciate your time today, okay? Wish we had more time, but we will catch up when the next big number hits the markets, okay? Gong Liang joining us from CFC. We'll be right back.